Well, according to the Investment Company Institute, that's the mutual funds big trade group, by the end of last year, nearly 38% of 401k plan assets were invested in equity mutual funds. And guess what? The fees on those funds continue to drop, meaning more of your money went to work for you. Joining us to talk more about this trend and others is Reid, chief economist at ICI. Brian, welcome back. Three quick questions. How much did the fees on average fall? Why? And how does this translate into more money into my pocket as a fund holder?
Well, fees have dropped 30% in the last decade, and just between 2012 and 2013, they dropped 5 cents. What do I mean by 5 cents? Well, stock investors in a 401k now are paying 58 cents for every $100 invested, compared to 63 cents in 2012 and a decade ago, 83 cents. What this means for you is that, as you said, more money of your money is being put to work into the market. And why this is happening is that employers are helping to drive greater competition, and the fund industry is responding. They're coming out with new share classes, new types of funds that have lower fees, and also investors and their employers are going towards more index products or passive products, which tend to be lower cost as well. All this is contributing to this decline.
And Brian, are you finding that investors are putting more of their money to work, possibly because of these fees? We always hear that the individual investor has so much cash on the sidelines. Is that cash now going into these 401ks and being invested?
There's a lot of money going into 401ks. There's no doubt about that. I think the improving employment situation, with unemployment coming down and employment going up, is helping investors have more cash flow in their overall balance sheets and their income, and some of that is being put in the 401k market. To your point about the sort of overall cash positions, we're finding that if you look at households overall, the amount of cash that they're holding, while the total dollar amount is at a record high, the percentage of the overall financial assets of investors is at a near record low at below 15%. And this has been hovering in this area for a long time. So investors look pretty fully invested right now, not only in their 401ks, but outside.
So far this year, Brian, where is the fund money, and not just in 401ks, where is the money going? In some of your research, it indicated to me that relatively less of it is going into actively managed domestic stock mutual funds, which speaks to the popularity, I suppose, of ETFs and index funds. But overall, where's the money going?
Well, we're seeing several trends. First of all, as you indicated, we're seeing strong inflows into passive, particularly in domestic equity, where the passive has, I think, the strongest presence. We're also seeing very strong investor demand for mutual funds that are investing outside the United States. You know, this has been part of a trend that's really been in place for close to a decade now, as U.S. investors have tried to diversify their portfolios within their 401ks and outside to include more foreign investing. This would even include some emerging market bonds and bond funds. In addition, we are seeing renewed investor interest into taxable bond funds, as well as new flows coming into tax-exempt bond funds. Even though last year we saw some outflows following the rise in interest rates, money is coming back in now.
All right, Brian Reid, thank you very much. Brian is chief economist at the Investment Company Institute.